Brief sound check, pass some reactions on the chat if you can hear me, and we will start just in some moments. Okay, so my name is Nikolajs, and I have 13 years of experience in finance, and during my long finance journey I was working in several companies, and 5 years ago I was working in Latvian-based unicorn company Printify, the company that connects merchant with factories. So basically it helped to build your own e-com brand through dropshipping. And at that point I have noticed that there are thousands of e-com shops that needs help in analysis, because if they will have higher literacy in analytics, they can increase their revenue and they can avoid some problems. So that's why after Printify I have opened company named John Gold Finance, where we, like a team of financiers, we are helping to several e-com and retail brands to grow, to scale, to go to another level, to increase several profitability and other indicators. So we are doing it through numbers, we are doing it through modeling, through preparing dashboard in order to, with numbers, prove the right direction to grow. So our clients receives not only the dashboard. Dashboard, it is not our main product, and finance model is not our main product. Our main product is increase of EBITDA or increase of valuation or increase of market share. So something that is really important for any founder. But dashboard or finance model is crucial in order to be on the same page with founder, in order to be transparent, in order to be clear. So in order to see what is your potential to grow, what is your possible risks. So that's why it is our tool with which we are helping to real clients to have some touchable results like increase of revenue, increase of margin, increase of EBITDA, etc. So basically, we are like the company which helps to grow. Okay, that's it on promotional part. So let's go to the educational one. So, as I said, 5 years ago, I was working in Printify and I had a lot of data on several merchants, so I can see the usual development pace. And I have noticed 3 main insights. The first one, it is so easy to reach 100k annual turnover. Really, I am disappointed that I didn't know this information when I was starting in school, because when you have a lot of time and your time is kind of cheap, so it is, I mean, the simplest way how to earn. And when my daughter will ask her pocket money, so I will send her some Printify link or some other dropshipping platform, because it is really so easy that even like 16 years old guy or girl can do it. But when you're going like bigger, so when you want to go from 100k to 1 million, it is already entrepreneurship. So you need to risk, you need to test several hypotheses, you need to invest some money in marketing, test different channels, and it is like something like entrepreneurship. You don't need deep analytic at this part, but still you need to think, you need to test, you need to try. And when you're going like from 1 million to 10 million, you need to do absolutely another stuff. So the actions that worked before will not work anymore. So, and if you will do like the same actions, so if you will just invest more money in marketing, if you will just add some additional SKU on your store, usually in 99% it will not work. In the best case, you will just create more problem for yourself, more hassle, and will not earn more. In like pessimistic case, you will even lose money, you will have losses, and you can face like problems like bankruptcy, etc. Why it is happening? So first of all, when you're going bigger, so you need to have higher margin, because you need to cover operational costs. So because you can do it alone or with one guy like in your team to serve business for, I don't know, 100 clients. But when the number of clients go bigger, so you have higher number of returns, you have higher number of chargebacks, etc. So that's why you need to have more people. So you need to kind of invest in operational cost. So when you become bigger, you cannot be dependent on some factory, because when it is like big amount, you cannot rely on one factory. So you need to have several ones, and also you need your own stock usually and your own kind of inventory. So because dropshipping will not work anymore because of margin, etc., etc. So also you need to take into account that each your client become more expensive. It is kind of economy of scale. So the first layer of clients usually are cheaper. Then when you're growing, each new client is more expensive. And if you're going to the new market, you also need to investigate it, you need to invest in it. So and usually clients in new markets are more expensive than in your beachhead market. So that's why there are a lot of different scenarios, a lot of different metrics that you need to consider, and you need to kind of find the most effective pace, because when you're small, you have a lot of rights on mistake. When you're going bigger, basically the number of mistakes is minimum. So, and you need to take it into account. And basically, there are thousand metrics that you need to consider. Of course, you need to consider your cash flow, and you need to be sure that you will not face any cash gaps, considering all the payment terms with factories, with delivery, from your clients, etc. You need to consider your P&L, margin, and so on. But let's speak about like 5. I believe it is very obvious, but on my own experience, when I was working with several e-com brands, I have noticed that sometimes they don't consider it, or they know the number but they don't know what to do with this number. So the first one, when you're scaling, it is very important to understand and track your cost of acquisition. So because basically it is the main fuel and your main costs. So you need to consider how much is each new client, and it can grow. So it is okay when it is growing. It is okay when it is growing dramatically when you're going on new market, but still it should grow with the same pace as your revenue is growing. So you need to consider it as well. So you need to avoid the situation when your cost of acquisition grows dramatically but revenue stays the same. So in this case, you are investing more money to reach new clients, but those clients don't buy products so in the same volumes that you expect. So, and you need to be careful, you need to test several hypotheses, you need to find the channel where cost of acquisition is the lower, you need to scale this channel, but you need to also understand that all the channels are not infinite, so that's why it is repeating process. It always you need to find new channel, to test new ones, to be sure that your cost of acquisition is optimized. So the second metric is average order value. So when you have acquired client, when you have like the sale, you need to be sure that you maximized this sale. So in this case, you need to work either with pricing, either with upselling products. So it is okay when you're small, you have, I don't know, 5, 10, 20 SKUs, and you can not to think about upselling or something like that. When you become bigger, you need to think about each sale. So, and even upsell, I don't know, 5%, 10% on a large scale can generate significant EBITDA in the long term. So the next one is contribution margin. Basically, it is your gross revenue. So it is your revenue after all the cost to shipping, to platform fees. Also, it is very important because some platforms, they have huge fees. So that's why you sometimes like you need to go from Amazon to Shopify, or from Shopify to WooCommerce. So it is a strategic decision that needs investment, but sometimes in the long term it is beneficial for you. So, and you need to track it. So you need to be sure that it has positive trend, or at least not negative trend. So if your gross margin, contribution margin going down, so it is a red flag for your business. You need to reconsider either pricing, either suppliers, either cost of acquisition, or fees or shipping fees. So you need to understand what is your revenue and what is your contribution margin and everything that is between. So you need to analyze as fees, as costs, as shipping. So because each element is very important. Lifetime value of customer also is extremely important for e-com business, because you don't have any physical assets usually. You don't have, I don't know, buildings, cars, or something else, equipment. So the main asset is usually your customers. So that's why it is very crucial to also understand its value. So because it is your wealth. So and we need to understand kind of lifetime of the customer, how long customer is with us, and what correlates with it. So maybe we need to improve our customer relation, customer support, or quality of the product. If we see that customer is not going back to us, or we need to add some new products. So it is usually a huge win when some e-commerce stores can add products that could be sold with subscription. So if you can do it, so it is a very good decision for your business, because you can make better prediction and your LTV growing significantly. So like value, so value basically depends on average order value. So you have customer, you need to be sure the customer is as long as possible with you, and you need to be sure that each order made by customer is as big as possible. And last but not least is payback period. So it also shows efficiency of your cash flow management. So because it is main investment, so you invest in cost of acquisition, so you are waiting when customer will go to your platform, will buy, and you need to know how fast the customer will be kind of paid back. So it is very good when customer could be paid back with the first order, so perfect. But some business model work in another way. So some business model works that you need to make like 3-5 orders, and only then you will only reach break even, and after 5 orders you will start to earn. So it is also very important to understand in order to build your marketing strategy, because if you see that I don't know, you invest in customers and they buy something, they are not paying back, and they are not making repeating purchases, so it means that you are doing something wrong and you need to change your strategy. And so everyone asks, what is the number, I don't know, the best number of LTV or something like that. And it depends on the industry. Of course, I mean, each industry, each region, each even size of the company have different benchmarks. But there are some magic numbers that work for like 99% of businesses. The first one is ratio LTV over cost of acquisition. It should be higher than 3. It is very good when it is like 7, 10, whatever. So, but also you need to stress test your business. So what will happen with your business if this ratio would be on the level of 3? If you can survive, it is okay. If you cannot, even if today it is 10 and you are doing good, so it means that you are on risk level, because as practice shows, at some point when you are big enough, so you are going to this ratio. So to like LTV over cost of acquisition is around 3-4. So it could be high enough on like when you are scaling, but at one point you will reach this number, like just on practice. And basically, what does it mean? So it means that your lifetime value from customer, so what you earn from your customer during whole lifetime while customer is with you, is 3 times higher than cost of acquisition for this customer. So it is enough to grow. So because when it is lower, it is almost impossible to grow. So payback period should be less than 60 days. Also very important, because it shows on how long you're freezing your money. So, and if it is longer, so you need to think twice. Should you freeze money on half a year just to earn some, I don't know, 10% from it? So maybe deposit in some banks will be more beneficial for you. So 60 days is okay. So you can freeze. You will have cash flow in this case, and you can keep growing. Because if you freeze money on, I don't know, 3 months, 4 months, you need to wait too long to reinvest this money again. And contribution margin should be higher than 30%. And if like first 2 metrics, I can say just common for 90% of businesses, and maybe even more, this contribution margin is very unique. So for each sphere, and there are thousands of business very successful where contribution margin is, I don't know, 0.5%. But if contribution margin is too low, it is too risky, and you need to kind of assess all the risk. You need to understand it. You need to hedge all the risk, because you cannot afford for yourself any volatility. So when your contribution margin is high enough, yes, you have some rights on mistakes. Volatility is okay, so you already took it into your future profit. So, and yeah, the most strategic decision usually is when you're growing, so you need to kind of go from drop shipping to your own inventory. So, and usually it is kind of obvious and the right decision, but sometimes you're trying to scale, you're trying to reach new horizon, working with factories like dropshipping with dropshipping model. But in long term, it doesn't work because dropshipping is great tool for testing idea, but when you want to scale, you need to kind of avoid it. You need to have your own negotiation with factories. You need to have your own inventory because first of all, you have too many clients and the volume is too big. You need to diversify it. So you need to have many factories and you cannot rely on some partners. So if your business is 100% dependent on one factory, so basically you are on a huge risk level. It is kind of point number one. And point number two, at some point when you have operational team, when your marketing is increasing, you cannot afford for yourself to pay extra like part of your margin to some factories who is delivering products for you. So you need to find your own shipping carrier, you need to find your own factory, your own storage in order to save money on each step of this chain. And when you have your own stock and your own inventory, you need to optimize it, you need to work with it. So, and it is not kind of once per year. So these events should be repeatable, should be recurring, like on a monthly basis at least. So, and there are, I don't know, not thousands, but like hundreds different matrices, frameworks, how you can optimize your assortment. But let's consider the most popular one and the most effective one, on my opinion. So it is when you consider all your SKU in two dimensions. First dimension is velocity, so how much are you selling per month, and second dimension is margin. So what is like margin of your product? And product with high velocity and high margin are your rockstar. So if you have physical retail stores, you need to double face it. If you have online, you need to put in different categories. You need to build your marketing strategy based on those products. So it is your core product. You need to be sure that factories that produce this product have good relation with you and long-term relation with you. So because I mean usually this kind of part makes 80% of gross profit for your company. So this is like God for you. The second group is products with high margin and low velocity. It means that those products are very expensive. So because margin is high, but people don't want to buy this product with this margin, with this price. And for these products, you need to make discounts. And when you are doing discounts, you need to follow two rules. The first one, you need to do it loudly. You need to tell everyone about that you are making discounts, and you need to deliver this message to your marketing team if you have this, in order to kind of be sure that everyone knows that you have discounts, because it is not only the way to sell these products, it is the way to increase your brand recognition. So that's why it is crucial that kind of you told everyone about discounts plans. The second law is that you need to have some number trail. So when you're making discount, you need to consider, okay, how big discount can I make? What type of discount it should be? It could be 1+1, or it could be 25% or 50% or something like that. So, and at the first point, maybe you will not know. So, but you can first of all consider the market. What are your competitors do? So, and secondly, if you have any historical price changes, you need to understand what's price elasticity for your product, how market reacts when you change the price. So, because for some product it will have effect, for some product it will not. So it is microeconomic concept that basically works for year. So there is no right answer how much discount should be, because it really depends on each product, and you need to consider how market reacts on it and how demands react on it. So the products with high velocity but low margin, it means that you have huge sales but you don't earn on these sales. It means that you need to increase prices for those products. And if discounting we are doing loudly. So increasing prices we are doing as silent as possible. We don't tell to anyone. So if it is possible, of course, because sometimes if you have, for example, subscription, you need to inform, unfortunately. But you need to do it like calm, just one by one, not for all products in the one time. And also you need to consider how market reacts on it and how your previous price change reacted on it. And when you changed price, doesn't matter, like change price to be higher or to be lower, you need to test after, I don't know, 2 weeks, 3 weeks, what happened. So does velocity changed or not? So and you can remake your price again. So it kind of allowed to change price several times per month. And for products that have low velocity and low margin, it is the hardest decision because you need to liquidate it, you need to remove it. So and even with losses, even with price lower than cost, you need to remove it because you need to first of all free some cash. You need to kind of delete some rubbish on your web page to be more effective, to be kind of more attractive for your customer. And besides the stock management, it is also important to manage your OPEX because when you are going bigger, your operational costs are increasing as well. So because you need to hire some new people for customer support, for marketing, for warehouse, you need to have some software. And today in the century of AI, so software is very crucial because usually like even 1 or 2 years ago, I didn't pay any attention when considering OPEX on software. Okay, you're paying for Google $200 per month or something like that. But now when there are AI tool on each problem, sometimes software could be very expensive. And when it is subscription, you need to think that you need to kind of multiply all the cost by 12 for each software that you have. So that's why when you're planning your future, when you consider your budget, please reconsider this software. Like, do you really need it or not? So the same with overhead logistics. So you need some have warehouse in different countries maybe. So and also each operational cost should have positive ROI. So when you're thinking, should I open one more warehouse in I don't know USA because I have many clients in USA. So we need to like run additional model, additional scenario when we can see. So how much EBITDA will I have if I will deliver from Poland, and how much EBITDA will I have if I will deliver directly from USA. And of course, it will also affect not only on the cost but also on the delivery terms. It means that I can increase my demand, etc. But I need to consider all those things and make decision based on numbers. And yeah, if you want to go to 10 million kind of revenue to this target, you need to have financial model with all the scenarios, with cash flow management. You need to have inventory planning, so to be effective as effective as you can. You need to have marketing forecast, cash flow forecast. You need to track margin for each your SKU. You need to have assortment matrix as is shown to make some decision. So it is like minimum list that you need to follow to go to the next level. And there are thousands of other questions that could be, and in order to answer on those questions, at least it is not kind of problem solver for each problem, but at least you need to have basic analysis of your business. So you need to have it on dashboard. So you need to consider your revenue and track it, compare it as with previous months or like the same months in previous year as with target, because you usually have target and all your strategy bases on the forecast. So that's why you need to make plan fact on monthly basis. You need to consider your gross profit, so for sure net profit as well. You need to know your inventory value because basically it is your wealth. So at some point you need to understand, okay, if maybe I don't have so much sales, maybe I need to decrease some buying of new inventory because my inventory is already too big. You need to know all the problem items. So sometimes like especially retail store, they need to sell something with negative margin. It happens, unfortunately, and it is perfect if you can avoid it. But at least you need to pay attention on it. You need to know that you have some problem items. So you need to think about margin efficiency, so contribution margin, gross profit margin. You need to know your break even. So what minimum revenue should I earn each month in order to be on break even point, just to like avoid negative EBITDA. So you need to see like your sales in dynamics. You need to know your best categories and your best sales channels. And sometimes you can say, okay, maybe if I have one category that overkill all others, maybe I can focus only on it. So there is no right answer, but at least you need to consider it and know what category is most important. The same with channel, the same with brand. And if you have multi-brand history, so you need to be sure that the best-selling brands, you have good negotiation with brand representative. So regarding the unit economics, as I already said, you need to know average order value, cost of acquisition, LTV, ROAS, so all the gross margin as well. And like third time we will tell about each dashboard will work only if you will take decisions looking at those dashboards. So that's why you need to see, okay, the assortment matrix is the easiest tool how you can make decisions. So you can say, okay, those products I need to just double faces, those products I need to liquidate, here I need to raise price, here I need to decrease price. Then we can go deeper and we can understand, okay, how big discount should I provide, how like big price increase should I make. So it is point number one, but at least you need to make some decision looking at your dashboard, at your finance model. So the same, you need to kind of on a daily basis consider, do you have some problem with inventory, how many products do I have on my stock, and will I have these products on stock when high seasons will start. So there are thousands of metrics that you need to focus on, and it is extremely hard to focus on all the metrics. That's why you need to have some financial model, you need to have some dashboard that in ideal world is connected with your Shopify or with your Amazon, that can make red flags in order to increase your attention on really problem things. Because when you're considering like thousands of metrics, it is impossible to see the problem or to see the opportunity. But when at least part of your work is optimized and there is some math behind, and there are emphasized kind of tricky values, it can help kind of you to save time, and it can help you to grow your business. Okay, so I hope that it was useful. So thank you very much for watching me. As YouTube star are telling, so put some reactions and comments below. So and now I will go on your question and will try to answer on it. Yes, how did we make this dashboard? So basically, this is, I can say, 3 steps. Step number 1, we need to collect all the data. We need to build the structure in order to be sure, okay, data is clear, so we can believe to this data. We know all the data sources. So number 2, we can do the simple dashboard with like no design, just in spreadsheet or Excel, just to see that everything is working. And number 3, we are using some AI tools just to connect like our main work, like in Excel, with some HTML code to see this web-based dashboard, and then we're trying to automate everything in order to have as less manual work as is possible. So, next question: what is a healthy marketing spend percentage for e-commerce? Good question. So basically, it it is not so important how big is your marketing, it is important how big is your return on marketing expenses. As long as your lifetime value of your customer is 3 times higher than cost of acquisition for this customer, everything is good. So if at one point your customer becomes too expensive, so or it start earn too less for you, then you need to reconsider your marketing strategy. But basically, if you see that your metrics are very good, so your LTVs or cost of acquisition is high enough, you can invest all revenue, all EBITDA on the marketing expenses, because you will just multiply it. So as long as you are growing, so you can spend up to 100% of EBITDA. So of course you need to have some safety fund, but let's say all other stuff you can spend on the marketing. So the next question: does this dashboard work based on app integration with other software or based on Excel? So as I told, we are building the structure in Excel, so just a structure, but then of course we are trying to connect it with different dashboards, with Shopify, not dashboards, but software. So with Shopify or with your ERP, or if you have some stock with inventory system, so just to automate it and decrease manual work and decrease opportunity of mistake, because when we are doing something manually, there could be mistake, so that's why we are trying to avoid it. Do you have some more questions? So I see that there are no more questions. So one more time, thank you very much. And you can scan this QR code for free consultation, where we can help you to find how to grow, how you can go to the next level. So scan this QR code, book free consultation with us, and let's grow together. Thank you.